Joining the panel this week, Wall Street Journal columnist and deputy editor Dan Henninger, editorial board member Mary Anastasia O'Grady, and Washington columnist Kim Strassel. Kim, before we get to the next tax increase, I want to inform our viewers about this stealth tax that was included in the big tax increase, eliminating some deductions and exemptions for taxpayers above $250,000, not $400,000,
right,
as the advertising, the political spin on this deal suggested. How did that happen?
Well, this was stuffed in there. It was a revenue grab by Democrats. It's a little taste, Paul, of what they would like to do in terms of further closing deductions and loopholes for the wealthy. But the technical term for these are PEP and Ps, and what they are basically, it's a phase out of the ability of deductions for those who are higher income taxpayers. And as you said, came at a much lower threshold than those marginal income tax rate hikes that were the subject. Thrown in there, dead of night, it was something Democrats demanded, and it managed to add to the amount that they could claim in revenue.
Yeah, but $150 billion of the $620 billion tax increase are going to come from these provisions, so they're
exactly
very, very significant, and a lot of taxpayers will get this big surprise come next April. So, Mary, here's the question. We have this big tax increase. It's significant. The president won. Let's face it. He really got what he wanted. So why do we need more revenue? I thought this was going to solve the deficit problem.
Paul, if you look at 2011 IRS statistics, about 2% of U.S. households earn $250,000 a year or more. If you took all of their income, you would run the government for less than a half a year. Okay, there's just not enough.
Every dollar they earn.
Exactly, and there's just not enough money in the rich to pay the bills that we have. And so, I think Howard Dean has admitted this. Many people who are Democrats who are outside of elected office have admitted this. And we all know that, eventually they're going to go after the middle class. And as Kim says, one of the ways they've already decided to do this is using the limiting deductions. And in fact, I should add that people earning, couples who earn $130,000 each individually, fall into this category where they start to lose deductions. This isn't exactly rich people, particularly if you live in New York.
Because if they're joint filers, it's over the $250,000 threshold, and that's when it begins to phase out. Dan?
Paul, the Democrats believe, this generation of Democrats believe, that over the last 40 or 50 years, the United States has made all these social commitments to the population, Social Security, Medicare, Medicaid, now Obamacare.
Well, we have.
And we have. And they think the conventional wisdom, the Simpson-Bowles type argument is that we can't afford this, that out 25 years from now, all of our taxes will be going to pay for these things. The Obama Democrats believe we've made these commitments and we have to find a way to pay for them. They do not want to cut this spending. And so U.S. spending, which has been about 20% of GDP since 1969, I think, they're trying to get it up to around 24 or 25% of GDP. We keep repeating this number, but in a $15 trillion economy, every percent of GDP is a tremendous amount of spending. But tax revenue, the last 3 years, has been down around 16% of GDP. That's a tremendous gap,
but
and they want to raise taxes to close that gap.
But part of that reduction to normally it's about 18.5, and it's popped up under Bill Clinton's presidency above 20% when you have a real economic growth.
If you have real
16% is because the growth is so
well,
slow.
that's what yeah.
Well, their policies are going to guarantee, in my opinion, 2% growth for a long period of time. They will never get tax revenue back up towards 20%.
Kim, let's talk about another tax that's on the table. Dick Durbin, the #2 Democrat in the Senate this week, raised the prospect of an energy tax in addition to this. And this reflects part of the point that Mary made, which is you can go after the rich under the current tax code. You can't begin to finance the government we have. So ultimately, you got to find new ways to get the revenue. Is this energy tax actually going to be a live prospect in the next couple of years?
Oh, they're going to try it, and I think we all owe Dick Durbin a bit of thanks for being so honest about what they want to do.
Yeah, I agree.
You know, as Mary said, you can go after everybody that's rich. You can't get it, so you're going to have to go after the middle class. The problem for Democrats is that they have now vowed that they're not going to raise income taxes on the middle class. So instead, what you have to do is go after a product that everybody uses, that is essential to everyone's life. You do it with energy. You tax electricity, you tax gas, you tax oil for your heating in your home. This would be a huge hit to the economy. But they are going to try to do it. They may try and do it under the guise, for instance, of a carbon tax, so they can look as though they're being environmental in this process as well, too. But this is going to be the quickest and easiest for them, they think, way to try to slip a broader tax on the middle class into the discussion.
Mary, how should Republicans respond to this?
Well, this is what happens when you have politicians who never think about growth, as Dan was saying. I mean, I think the way they should respond to it is a larger economy means more revenue for the government and more jobs for people and more prosperity and a happier society.
What about
should be the focus.
What about trading an energy tax for lower income taxes, Dan?
I think that's probably, they'll do something like that. A carbon tax, I would think maybe in return for lowering payroll taxes.
You're saying the Democrats will propose this?
I think the Democrats would propose it. Carbon taxes are extremely unpopular politically. Remember Bill Clinton's 1993 BTU tax?
Right.
Some Democrats say they lost the House in 1994 because of that.
All right. When we come back, President